Hey guys, Rajiv here from Financial Hub India. So we'll be doing our lesson 3 today. And before going for lesson 3, let me have a recap about lesson 1 and lesson 2. All right. So in lesson 1, we have seen some technical analysis softwares which we may use for our analysis purpose. So we have seen AMI Broker, we have seen TradingView, we have seen MT4, we have seen Trade Tiger. Then what are the other softwares you can use? You can use Meta Stocks. You can use Chart Nexus, right? A simple software giving you candlesticks, plain candlesticks. Some software companies will call you and they will try to, convince you, saying that we have a robot in this, we have a scanner in this, we have this and this, we have that in this. We need nothing at all, nothing fancy. Simple, plain vanilla chart. That's it. And every software, let it be a software of 500 rupees or a software of 5 lakh rupees, every software will have the candlesticks in there. So things are pretty easy for us as a price action traders. In Now in lesson 2 we learned how to track the momentum of the candlesticks, right? Now we have seen 4 different structures in there. we've we have learned to draw some particular structures in a form of lines going up and down on a plane chart, so that we can get the direction of the overall market momentum or the price momentum. Why we have drawn those lines on the chart? Basically because looking at a particular candle or a bunch of candles, it's hard for us to analyze which way the price is heading. So reading the bunch of candles, the primary thing we want to take out from the market, from the chart, is that which way the price is heading: upward, downward, or it's heading nowhere. We have seen 4 structures in lesson 2. So for the first one was current price breaking the previous high. Second was current price breaking the previous low. Third was current price breaking, not breaking the previous high and low. All right, which is known as mother and child, as well as insider candle. And the fourth one is the current price has broken the previous candles, previous high and low, both, which is known as outsider candle. All right, and we have seen how whenever you see these four, how to draw the lines on a chart going up and down whenever you see these 4 different structures. All right, now in lesson 3 we'll see the benefits of drawing those lines. Whatever we have done in lesson 2, the benefits, we'll get it now in lesson 3. Now in lesson 2 we have seen the candlestick momentum is limited into 4 different categories, isn't it? These are the 4 possible structures a bunch of candlesticks can form when it moves up and down. Correct. Now in this lesson we'll see in 3 particular different shapes only. See, we are trying to see the price action momentums on a particular plane chart step by step, right? First we understood how the candles are forming. Now then we understood, while the candles were forming, what are the different structures it was making and forming itself. And we got 4. So now we are saying all those 4 structures will form in only 3 different shapes. Hopefully you're getting it with me. In our third lesson, we'll be seeing those 3 shapes. What are those 3 shapes? Once we understand those 3 shapes and are able to figure out those 3 shapes happening on a chart, you are almost 40 to 50% done. Our analysis is almost 40 to 50% done on the chart. You got it. So far we are trying to analyzing the direction of the price momentum, which way it's heading. If we plan to go somewhere and we have a map of that place with us, and if we can plan it properly, if analyzing the map itself, we can figure out the way to we can figure out the way to reach there properly in a planned way, then it becomes much easier for you to reach your destination, isn't it? Right? So the same thing. Once you open a chart of a particular stock or commodities or currency, and on your first look, if you are able to see which way the particular script is heading, up, down, or neutral, then rest of the things becomes much easier for you. All right. Now this third lesson, I have planned to complete this third lesson in 2 to 3 different parts. So it will be a lesson for 2 to 3 series, you can say. All right. So right now we are just doing the part one, which is the fundamental thing, which is the basic of this concept. And once you understand the basic of this price direction momentum concept, then our next part will be based on the core concept. Okay, now I have a chart of Bajaj Auto here. This is a 1 hour time frame chart. Now the data here is from 28th July to 23rd September. Now I want you to focus on this drawing picture. Now here I have drawn some candles randomly, and and hopefully you will be able to draw the momentum of it, right? Now you can do it. See, the highs are broken here. So from low to the high, then the lows are broken. Lesson 2. Then the highs are broken. So you go up first to structures, right? So this is how the lines will be drawn here. Okay. Now I want you to assume price has traveled from a particular price range here. Let's say this area is a 500 level for any stock ABC, and this is a level of 600. So from 500, the stock, the price traveled up to 600 level. But if you see the nature of its traveling, right from 500 level, how the candlesticks have formed and how it traveled this 100 points move, we can see two different things here. The first thing so far we can see is we can draw lines here. So one is straight line adding the highs, the second is straight line adding the lows, third is straight line, fourth is straight line, fifth is straight line, 6, 7, 8, 9. There are 9 straight lines between 500 to 600, right? Now all these straight lines are connected with each other, isn't it? From this high to this low, again from this low to this high, from again this high to this low, again from this low to this high, again from high to low and low to high. So in a broader picture, if we see these momentum from 500 to 600, we don't really see straight lines, but we see some zigzag lines, isn't it? So drawing 9 straight lines will create a few zigzag lines overall. Either the price, either the lines are zigzagging on the upside, or the lines are zigzagging on the downside, or the lines are zigzagging in a flat condition, neither up nor down. So that's the scenarios here, right? So if I show you the next chart, the next drawing, it has the opposite thing. You can easily draw these lines, adding the lows, again add the highs, again add the lows. So you come down, we go up, come down, go up and down. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9 straight lines. Again, when combined with each other, overall it became some zigzag lines. Price is falling down, maybe this level is 600 we are considering, and this level is 400. So let's assume from 600 the price has come down to 400 within last 1 week, for an example, in a zigzagging manner. So even though price has come down from 600 to 400, but it didn't come down in a straight line, right? The scenario could be right from 600 to 400. Let's say this is 600 and this is 400, and the scenario could be this also, isn't it? A plain straight line also, right? But that is not the scenarios here. But this straight line is the scenarios internally. Maybe from 600 here, from 600 there is a fall for maybe 20 points up to 580, and then from 580 there is an up move for 10 points. Then again from 590 there is a down move for maybe 40 points, for example 550 points. So there are small straight line momentum, but overall it is a zigzagging momentum we can see on the chart. So the third condition is this: even though we see zigzagging patterns here, it is rising or falling. It is neither rising nor falling overall. It is just moving in a range, isn't it? In a particular range. So these are the three shapes: up, down, or flat. In these three conditions, price can travel from one price level to other price level. No other shapes you can see. Either zigzagging on the upside or zigzagging on the downside, or in a zigzag manner going nowhere, right? So if I show you some charts, this is Bajaj Auto chart. Here you can see we have price, we have straight lines from here to here, here, again here, again here, again here, again going up, again from here to here, straight lines from here to here, but overall from here to here, but overall what's going on? If you connect all these straight lines with each other, you will be seeing a lot of zigzags. Yeah. And now we need to understand these zigzagging patterns and come out with some structure on it. All these zigzagging lines will give you none other than all those three shapes which I have just now shown you: zigzagging on the upside, zigzagging on the downside, zigzagging in a flat manner. Now here is the note for these three shapes: uptrend, downtrend, and the flat market conditions. So based on the conditions of the zigzag price momentum we see on the chart, we can figure out three market conditions out of there: the uptrend, downtrend, or flat or the sideways market. Now here you can see the definitions of an uptrend. When some criterias, when some certain criterias are seen in an zigzag price momentum, then we can say this is an uptrend. And these are the criterias A and B for uptrend. Then when you see these A and B criterias happening in a zigzagging price momentum, then you can say that is a downtrend. And when you will see this A and B happening in a zigzagging price action momentum, then you can say that is a flat market conditions. These are the three conditions can only in a particular chart. That's it. Nothing other than this can happen. All right. Now, based on whether the script is in an uptrend, whether the stock is in an uptrend or downtrend or flat market conditions, we'll have to apply our trading strategies accordingly. Now I'll go to uptrend chart and I'll explain you how these uptrend conditions are seen in this chart. Same for downtrend and flat market. But before that, let me clarify a few technical terms with you. right? Where we'll do what is a impulse move, what is a corrective move, because you can see this impulse and corrective move in all three actually. A, B, in all A's are based on impulse and corrective move, right? What is a swing? What is a higher highs and higher lows, or lower highs and lower lows, right? So point A is all about impulse, move or swing, or corrective move and swing, and point B is all about higher highs, higher lows, or lower low, lower highs. Now these terms. So let me clarify these terms to you first. Then it will be easy for us to understand each pattern, each market conditions. Now let's talk about the term swing first. So far we have been talking like from here to here. When you draw a candlestick chart momentum, you add from this level to this level, isn't it? Again from this level to this level, right? So far we have been saying this is one line, then you draw the second line, yeah, then you draw the third line, then you draw the fourth line, right, which creates a zigzag momentum. This is how we were talking so far. But now onwards you'll not be saying one line, two line, or three line. You'll be using the word swing instead of line. So first swing, second swing, we have a third swing, then a fourth swing. So every line will be converted into swing now. Secondly, every swing every swing is either going up or it's going down, right? So this is a swing up and a swing down, then a swing up, then a swing down, isn't it? Right? So firstly, we'll be calling every line as a swing. Secondly, we'll be saying we'll be talking swing up or swing down. Swing can never be only swing. It will be either upswing or a downswing. Correct? Whenever you see a larger upswing and a smaller downswing, and again a larger upswing, then a smaller downswing. So it's like you'll have to compare two swings. That's it. When you compare two swings and you see the first swing is the larger one and the second swing is a smaller one. So it's like this is your swing one, which traveled from this space to this space, this price level to this price level, right? So let's assume this price level is 500 and it goes up to 600, for example, and then it goes up, it goes down. It from 600 it goes down to, let's say, 550, and from 550 again it shoots up to, let's say, 650. All right. So here a swing, a larger swing up from 500 to 600, 100-point push up. The price moved up for 100 points. It has just fallen for 50 points. So price going up much higher and going down much lower, right? So if you compare this swing with the next swing, swing one, if I'm saying it is swing one and this swing two, then swing one is larger than swing two, right? Then swing three, this is swing three, is larger than swing two. Okay. So whenever you see this kind of patterns going on, where you have a higher move up, a larger move up, a larger move towards the upside, all right, and then you have a smaller move down comparatively, and then again you have a higher move, a larger move up, and a smaller move down, and again you have a higher move up, followed by a smaller move. Even though we have upswing and downswing, both the swings are present in a particular chart, but still, which swing is more powerful? The upswings. You can categorize these two swings, upswing and downswing, into primary or secondary swings. also called as impulsive or corrective swings. So primary swing nothing but the main swing, the larger swing. So which is the primary swing here? This one, then this one, then this one, then this one, then this one. So these are the impulsive swing or the primary swing because these are the main swings. Prices mainly moving up, then falling down. And secondary or the corrective swings are this one, then this, then this, then this. Alright. So first of all you see a chart, then you draw the charting momentum, then you draw the candlestick momentum on the chart by drawing the lines where you have those four categories, right? We did in lesson 2. Then third is you define which is the primary swing here and which is the secondary swings here. If you see the primary swing is on the upside and secondary swings are on the downside, price is giving you larger push up and smaller push down, again followed by a larger push up and a smaller push down. And so you are saying the larger pushes are the primary swings, are the main swings. Since the primary swings are moving up, and so obviously the market will move up, the prices will move up. All right. So when you see the primary swings are on the upside, then you can say it's an uptrend, which is here, which is our first shape. The price is in the upside, right? So the same concept you can follow for a downtrend. In a downtrend, exactly opposite will happen. In the uptrend, what happened? We have seen larger push up and a smaller push down, then the up move, and then a larger push up, smaller push down. And this is how it continued. So we are saying this is primary, this is secondary, but here you see larger push down opposite and a smaller push up. A larger push down, again a smaller push up, larger push down, a smaller push up, and so on. In the case of a uptrend, this was the primary swing. This is the primary swing, the up move, because this is the larger one. Here, which one is the larger? This downfall is the larger one. This downfall, this downswing is a larger swing than the upswing. Again, a larger swing, right? So this is our primary trend or the impulse move here, or the impulse swing here, or primary swing here is the downswing, right? And the upswing is the secondary or corrective swing. So you'll have to remember this name, right? So in technical terms, you'll be saying this stock is moving down because the impulse swing or the impulsive swings are on the downside and the corrective swing are on the upside. That is how you're supposed to talk. I mean, in future you don't need to clarify that also. When you say this stock is an uptrend or downtrend, then automatically we know what are the criteria it has fulfilled for you to say downtrend or uptrend, right? Now what's happening here for a flat market? No direction. The distance is traveled here almost the same distance it traveled from here to here. Again, the distance it traveled from here to here, price from here had traveled the same distance from there to here. And this is how overall price momentum is going on. So we have a flat market. We don't have a we don't have a primary or impulsive swing. We don't have a secondary or corrective swing. So whenever you see a market condition where you cannot compare two different swings into primary or secondary, then you can say that's a flat market. One more thing need to be clarified here. If you notice this overall pattern, there's a structure, you can see it. So that is a structure of an uptrend. It will always be seen in an uptrend only. This is swing 1 and this is swing 2. Right? Now this is swing 1's high and low, and this is swing 2's high and low, and swing 2 starts moving up from here. Now you have swing 1 here, this is swing 2. Now swing 3 is starting from this point. Now swing 3 goes up and breaks what? Swing 2's high and goes up to here, right? And again from here it falls up to here. So swing 3 itself made another high, isn't it? Now again this is a high and low for swing 4. Again it moves up and goes down. So swing 5 creates another high and low. So look at the pattern. In this pattern, you always have a higher high. The next high will always be higher than the previous high and higher low. The next low will be higher than the previous low it formed. And same as here also. This low is higher than this low. So in an uptrend, this is a characteristic of an uptrend. In an uptrend, you will always see price making higher highs and higher lows. Alright, so remember this pattern. We'll be using it in future. Here you will have the opposite thing. So what's happening? In the swing, this is the highest point. Swing high, this is swing low. Again a swing high and a swing low and a swing high and a swing low. So exactly the opposite is happening here. You have a lower highs in swings and lower lows in swings. So in a downtrend structure, you will always see lower low and lower highs formations or patterns. Right? But here you can't have anything. You cannot have higher high, high, low, lower, low, lower highs formations. So now this note will be clear for you. In an uptrend, you always have larger move up and smaller move down. Larger move. First there will be larger move, then there will be smaller move followed by it. So the larger moves are also known as impulse move or impulse swing, and the smaller move are known as corrective move, corrective swing. Corrective swing. Price pattern will form higher highs and higher lows, which we have seen just now. The exactly opposite is here. The price pattern will form lower lows and lower highs, and there will be larger move on the downside and smaller move on the upside. In flat market, all moves or swings are equal to or almost equal. Not necessarily will have to be exactly equal. And then there will be no price pattern will form. You will not see any higher high higher lows formations or lower low lower highs formations in there. So hopefully this is clear. Now, all right. So I have this Adani Port weekly chart with you now. We can see three market conditions happening. Here the price was moving up. The price is in a flat market conditions here, and here the price is in a downtrendy momentum. Now I have hidden some part here, like this much, and this much, and this much, because what has happened in these areas here are a part of our next session. So once we complete our next session, next part of this topic, then I'll disclose this part. Hopefully you'll be able to understand these parts also. So just to avoid the confusions, I have hidden those areas. So let's see what's happening in detail. I'll just zoom it. Let's assume the price starts moving up from here, and we need to figure out what's going on here, uptrend, downtrend, or a flat market conditions. So what will be your first job when you open a chart? First of all, you just draw the candlestick momentum lines. What you have drawn so far, right? So we'll be calling those lines as swing now. So from this candle, we can see the highs are broken, and then this candle's low is broken. So from here, we go up to here and draw a swing, and then from there up to here, we'll draw another line, which is a downswing. So this is the first thing you will do on a chart. Your second job will be comparing both the swings, whether the upswing is larger or the downswing is larger, right? And we can see the upswing is larger here and downswing is smaller here than the upswing. So we match one criteria for an uptrend, isn't it? You remember the note? For an uptrend, what is the first criteria? Point A is larger move up and smaller move down. But still we can't say it's an uptrend because we need criteria B to be there, where the price pattern will have to confirm a higher high and higher lows build up. So we don't see that so far. So our first swing from here to here, second swing from here to here, and we have a larger up move, we have a smaller down move, and then again we have a larger up move, and we can see a smaller down move. So we compare these two swings, this is larger, this is smaller, and again we compare these two swings, and this is larger and this is smaller, and then again we go up. We'll have to go up to where? Up to this point, and then we see these are the insider candles, isn't it? This is a mother one, and these are the insiders. So we'll ignore this one, this one, this one, and this one, and we'll directly draw the line with the next candle because the next candle has broken this mother candle's high. If you forgot, then refer lesson 2. Then from here we go up to here, right? And then from here we'll have to come down now, right? So far what we have, we have the first high, and then what we have done, we have broken the previous high and we made a new high, and again we made a new high. Now for this swing, this was the first low, and then for this swing 2, this is swing 1, for swing 2 we made another low of this swing, low of this the low is here for this swing, the high is here for this swing, and again we made another low. So what we are making, higher lows and also higher highs. So higher highs and higher lows are the criteria for what? For an uptrend. The price pattern will form higher highs and higher lows. So now you can say we have started flowing in an uptrend. The price is flowing in an uptrend. Now whatever the uptrend strategy is, which you'll learn afterwards, we'll have to apply that. Okay. Now next what happened? Price moved up till here and then started zigzagging again. But now what's going on? Is it making a larger higher move and a smaller down move? No. Is it making a higher down move and a smaller large move? No. We're saying all moves or swings are equal or almost equal. So point A is matching for flat market. And the point B is no price pattern will form. It means there will be no higher highs, higher lows, no lower lows, lower highs. Even that criteria is also matched, and we are moving in a range, so it's a flat market conditions. We are moving. And then what happened? If I assume prices started falling from here, okay. If I let's assume prices started falling from here, and from here what happened? Price moved down to here, and then moved up till here, and then again till here. So 1, 2, and 3. These are the insiders. So ignore it. So in 1, 2, 3 pattern, what we have seen? This is a swing. This is the first swing, and this is first swing's low, and this is first swing's high. And then we made another low here, and we made another high here, swing high, right? So our two criteria are matched here. First criteria is we are making larger down moves or down swings and smaller up swings. Again, a larger down move and a smaller upswing, smaller up move. Number one criteria. Number two is you'll have to make lower lows and lower highs. Sorry, making lower lows and lower highs. Yes, lower highs. You're making lower highs in terms of swings, and you're making lower lows because this was the last low. So there is one low here. Right? So when you are making lower low and lower high, then you are in a downtrending condition. Downtrend, your price pattern will form lower lows and lower highs with a larger move down and a smaller move up. Let's see a few charts here. This is silver, MCX, silver weekly chart. What do you see right from here? 1, 2, then 3, 4, 5, 6, 7. And then what happened? You won't understand now. That we'll do later. But so far, this is data for 18th August to 18th August 2013 to 14th September 2014. So throughout this time frame, we were just making lower low and lower highs with bigger down move and smaller up move. So impulse swing, corrective swing. Again an impulse swing, corrective swing. Impulse, corrective, impulse. Right? Then this is copper chart. 1, 2, 3, 4, 5, 6, 7. Yeah. So again, lower lows and lower highs. This is MCX aluminum. What do you see here? From here, price goes up to here. 1. Again, from this point, price again comes back to the same area. 2, 3. Again coming down to the same area. 4. So what's happening? It's a flat market conditions, right? So the flat market is going on. That's it. There is no impulse move. There is no corrective move. Okay, now this is zinc. What's going on here in zinc? 1, 2, 3, 4, 5, 6. Let's forget this part area. You won't get it now. We'll have to do it later. Forget this part. So from here, you have the next swing. So what you're making higher lows and higher highs, isn't it? So zinc is in uptrend. Then Nifty, right from here, 1, 2, 3, 4, 5, 6, and 7. This is data for 7th Feb 2016 to 18th September 2016. Making higher lows and higher highs. So Nifty is in uptrend. Right. So now, so that's it. That's it with our first part of this topic. And on the next part, we'll go more in depth in this analysis because since you have seen, I have hidden so many things in between. So I'll have to now disclose those things. I'll have to teach you those particular shapes to understand the entire direction momentums. Now let me give you a few hints what we are going to do on our next sessions. On our next part, when you see the price momentum, it won't be as easy as you have seen. Now let's say when I'm drawing this one from here to here, you can understand this part. Now this is the low, right? And this is the high. Now we need to understand when this low is made. There are some criteria. We'll do it. But again, price goes up from here and then again it comes down and breaks this low. So basically the structure goes like this overall and then it moves up. Yeah. So how to handle this part? So this is so this detailing we'll have to do. And very few times on a chart you will see plain swings like this. It won't happen like that for 70 to 80% time. It will happen for 20% of the times. For rest 70 to 80% of the time it will be like it goes up and there are swings, internal swings, then it goes down. This is how there will be more zigzags in between, and we'll have to rectify those, and we'll have to give those swings a shape, a pattern, and we'll have to understand those shapes, right? So like here, if the price is started falling from this part, then it goes up and then it breaks the prior low, so you're making lower lows, no doubt, and lower highs. But again, what happened next? Breaking, it breaks the prior high and then a fall. So if I see overall the price is in a momentum like this, but what about this part? So in part 2 we'll be doing more than these detailings, but it will be interesting. So that is the reason I was telling you this part 1 is a fundamental part, just a basic concept part, just to start it. It's a foundation. And once you understand these higher high, higher lows, lower low, lower highs, and the impulsive swing, the corrective swing, then it will be much easier for me to train you. So hopefully I was able to make you understand the concepts of this uptrend, downtrend, and sideways market. Looking at the topics for the next lesson, don't be afraid because I'll make it easy for you. Right. So now to explain a particular point, it takes a lot of time and it consumes a lot of time, honestly, to just to think about the way of explanations to you guys, so that it becomes easier for you to capture it. So for you it's maybe a 10 minutes or 15 minutes session, maybe just captured in the video and you are saying it. But to capture those 15 minutes of videos or 15 minutes of explanations, I need to spend a lot of hours behind it. So you don't need to worry about how those concepts will be and how you will able to capture those on the charts. So far you are connected with me, so far you are practicing these topics on your real-time charts and sending it to me, and you are in touch with me, things will be easier. This is my guarantee. So I wish to see at least 15 to 20 charts from your side showing me the uptrend, downtrend, and the flat market conditions in any time frame, in any particular date. Not necessarily you'll have to do it for today's market. You just open a chart and go back for last 1 year or 2 years or 3 years in any time frames, and wheresoever you can match the A and B criteria for uptrend, downtrend, or flat market, just mark it, take a screenshot and send it to me. And anyways, we'll be meeting on the Sunday webinars. We'll go through all of your charts and we'll discuss your queries in there. By the time, you can send me all those queries in the WhatsApp, in the group, in our WhatsApp group for the members, or in my private chat. So I'll see you in part 2 of this topic. Till then, take care.